This channel isn't about getting rich quick. It's about teaching the right way to build wealth in crypto, and that starts with understanding the right way to HODL. Everyone in crypto says, just HODL, but is holding forever always the best strategy? In this video, we'll break down the right way to HODL, and more importantly, when it might be smart to sell. Let's start with the basics. HODL started as a misspelled word for hold in a 2013 Bitcoin forum post. Since then, it evolved into a philosophy. Don't panic sell during market crashes. Stay focused on the long term. And for many investors, HODLing Bitcoin or Ethereum over the years has worked brilliantly. But HODLing without a strategy can also lead to missed opportunities or unnecessary losses. So, when should you hold and when should you sell? Let's start with when it makes sense to HODL. First, when you're investing in strong assets like Bitcoin or Ethereum, with proven track records and adoption, like Bitcoin is the OG cryptocurrency, its scarcity, security, and global reach make it the leader in the space. Ethereum is the OG smart contract platform. Its developer community and ecosystem of products make it the closest thing to Bitcoin in terms of staying power. And both of these assets have been around long enough to prove their resilience. Now, some will say to include layer 2 solutions like Polygon or Arbitrum, but for now, I'm sticking to the big two, Bitcoin and Ether. Second, when the market is volatile in the short term, meaning less than a year, volatility is normal for crypto. Short-term price movements are influenced by hype, media attention, regulation, and even tweets from influential people. But short-term price movements are almost impossible to predict. So, the best thing to do is ignore them. Selling too quickly often means locking in losses. By holding through short-term dips, you ride out the volatility and hopefully come out ahead in the end. Third, when your time horizon is long-term, meaning longer than 5 or 10 years, if you're planning to invest for the next decade or more, short-term dips don't really matter. You should be able to handle a 20% drop in any given year. In fact, research shows that you would have made more money in Bitcoin over the last 10 years if you had bought in during a peak and lost 50% of your investment than if you had bought and held all at once. That's because long-term investors usually focus on dollar cost averaging, or DCA, meaning buying at different price points over time. And finally, when an asset no longer has fundamentals, if a project is abandoned or losing relevance, it might be time to exit. There are thousands of projects in the crypto space, and most of them will fail. You can think of it like the early days of the internet. Hundreds of social media platforms launched, but only a few survived. The same will happen in crypto. So it's important to do your homework upfront and make sure the project has a good team, product, and market fit. Then monitor the project over time. If something changes, it might be time to sell. So those are the times to HODL. Now let's discuss when it's smarter to sell. 2. When you've hit your personal goals. Think about why you invested in the first place. Maybe you wanted to double your money, or pay off some debt, or buy a car. If you've achieved your goal, there's nothing wrong with taking profits and moving on. Don't get too greedy. 3. When the risk to your financial security is too high. You should never invest more than you can afford to lose. And if you need money for real-life priorities like rent, food, or family, you should sell if you have to. Protect yourself first. Now, I know some people watching this video will argue that they've made millions by holding Bitcoin since 2010, or Ethereum since 2015, and it's as true. If you held Bitcoin since 2010, you'd be a millionaire today. But think about how many opportunities you would have missed. Stocks, real estate, startups, maybe even other crypto tires, not to mention the stress of holding through multiple bear markets. And it's not realistic to expect that everyone will get in early to a generational asset like that again. So instead, you must practice realistic long-term thinking. And that means acknowledging that sometimes you will miss the biggest moves. But if you stay disciplined with your plan, you can still outperform by investing consistently over time. Here's the truth. Most investors won't achieve life-changing gains by holding one coin forever. Maybe 1% will. Most of us will find success by building a diversified portfolio with different investments, rebalancing regularly, and staying focused on our long-term goals. One of the biggest mistakes that new investors make is falling into the trap of never selling. They hold every coin forever, even the bad ones. But not all assets are Bitcoin. Some will rise and then collapse. Just look at Luna and FTX token. To succeed long-term in crypto, you must learn to separate your long-term HODL positions from speculative trades. And that means being willing to take profits when things go well and cut your losses when things go poorly. Take Bitcoin and Ethereum for example. You should hold these long-term because they have proven track records and strong fundamentals. But let's say you also own a smaller altcoin that's highly volatile. Should you hold that forever? What if it loses 90% of its value? Do you still want to hold it? Of course not. So set stop losses to limit your downside risk. For example, if you buy a coin and it drops 50%, you could automatically sell it. That way you're not emotionally involved in the decision. It's just your stop loss playing out. Let me give you another example. Remember, HODLing blindly is not the same as having conviction. If you bought a coin and the price drops 90%, you may not have done your homework in the first place. Having conviction is knowing why you bought something and sticking to that thesis over time. Blindly holding is just gambling. And as the old saying goes, you don't need to hold on to every winning stock for a long time. My favorite quote about HODLing comes from Chris Bernesk, a partner at Placeholder VC. He said, "We love HODLing here at Placeholder. We've HODLed Bitcoin, Ethereum, Maker, CDP, DAI, XYZ, and everything in between. But we've also sold a lot of stuff that we once HODLed. We've learned that conviction takes time and needs to be earned." In conclusion, smart HODLing is about balance. Create a plan before you invest. Decide which coins you're going to hold for the long term, which ones you sell at certain prices, and what percentage of profit you take along the way. That way you remove emotion and give yourself clarity. No matter what the market does, let me give you one last example. Let's say you invest $1,000 into Bitcoin and a small altcoin. Your plan could be, hold Bitcoin for at least 10 years, no matter what. Take profit if the altcoin doubles and exit if it drops 50%. This way, you keep your strong long-term asset and manage risk with your more speculative one. That's the difference between smart HODLing and blind HODLing. If you want to learn more about smart investing in crypto, subscribe to DCA Crypto Investor. We release free weekly videos with the best strategies from top investors in the space. Our mission is to teach the world how to invest in crypto, and that starts with helping you become a smarter investor. Thank you guys so much for watching. We'll see you in the next video.